So there's three things that buyers generally start out being extremely concerned about when they start searching for a house. I'm Andrew Gavin. I'm a licensed mortgage lender that covers all of California, and I sell real estate here in San Diego. There's three things that buyers always come to me and are concerned about, whether we're talking about their mortgage or we're talking about starting their home search. The first one is PMI. No one wants PMI, and there's pros and cons to having PMI. Ultimately, if you can avoid it, it's good because you save money. The second one is HOAs. Most people don't want to buy a house and then have to pay an HOA fee. Pros and cons to having an HOA, but almost always that initial conversation, buyers are against it. The third thing that they often bring up, and it could be different in your area, is Mello-Roos, which is a property tax assessment. Now, these three things tend to travel with most houses and most buyers that are using a small down payment loan. The Mello-Roos travels with properties across the county, and in most counties throughout California, there will be some type of Mello-Roos tax. Let's talk about PMI. So, private mortgage insurance is a product that the borrower pays to ensure the mortgage lender that if you default, they will be taken care of. This costs you money, generally $150 to $250 more a month, which ultimately affects your purchasing power, because adding $250 to your mortgage debt could reduce the amount of money you can borrow, forcing you to buy a house $20,000 to $50,000 less. So it's a significant thing. Plus, it's a fee. It's nothing that can be written off. It's just a fee you pay. The benefit of PMI, though, if there is one, is if you are about to purchase a home and you choose a loan with PMI, let's say you have the 20% down, and we go through this and we look at it, and I can show you that by changing the amount of PMI, whether you have it or not, it does change your interest rate. Sometimes if we add PMI and reduce your down payment to below 20%, you could qualify for a better rate. You can purchase your house, close your loan, and shortly after that, you would go back, make the final down payment, and then ask your mortgage servicer to reevaluate your property to remove your PMI. It's a few extra steps, but it ultimately could get you a slightly better interest rate. And with rates being close to the sevens right now, anything might help. There are pros and cons to private mortgage insurance. And I think the most expensive benefit of private mortgage insurance is it allows a buyer to purchase with as little as 3.5% down payment for the price of their home. That is a huge benefit, even though it does create an additional fee built into your mortgage. PMI in general drops off at 78% loan to value based on your initial purchase and loan amount. FHA, the PMI stays with the loan for the term. So completely different between a conventional and an FHA loan. There are other benefits to FHA if you're now thinking, oh, why would I ever get an FHA loan? We can talk about FHA loans and the pros and cons later on. Now, let's talk about HOAs, homeowners associations. So you want to buy a house, but you don't want to pay an HOA fee. You start searching around and you start to notice that at least half of the houses that fit your criteria of what you want and what you like, they're in an HOA. So ideally, you'd like to avoid it. But if the house that you like meets your needs, not considering it based on an HOA is probably a bad idea. Again, this is a fee, not anything that can be written off through your taxes or anything else. It's just a fee. But pay attention to what the benefits of the HOA are. Initially, we think, oh, it's oversight, it's controlling, it's a bunch of Karens running around nitpicking the things that I do to my house, or if I have an extra car, or if I leave my trash cans out, if this, if that. That's all potentially part of it. I have a buyer right now that came and said, he goes, man, I'm staying with my brother. He's in this HOA. They have a pool. I think I would really like to have a pool that I could just go down to after work and relax for 15, 20 minutes. That'd be great. But he doesn't want to maintain a pool, and he can't afford a property with a pool. He can pay the HOA fee that has a pool, covers landscaping, keeps the grounds up, keeps the roof up, keeps his neighbors' properties at a level that increases home value versus decreases it. So there are benefits to an HOA. It is a pretty nasty fee. It comes with the house, and sometimes an HOA will have restrictions that might infringe on how you want to live your life at your home. And that's when you really want to pay attention to where you're buying a property. Ideally, I think the cost of it versus the benefits of the HOA is how you want to make that decision. Each complex and community is going to be different with how they run their HOA and the rules that the HOA covers and enforces. So when you are buying, you want to make sure that you read the HOA documents and figure out if there is anything weird going on that you might not agree with. And that's when you want to step away from that particular property. Let's talk about Mello-Roos, property tax. It's baked into your property tax, but it's expensive. Let's use an example. Here in San Diego, property taxes are about 1% to 1.25. Mello-Roos items that we consider Mello-Roos tax are supplements on top of that tax. If your property value times 1.25% equaled, say, $5,000. These supplemental Mello-Roos taxes would be on top of that. It could be $20, it could be $30, it could be $50. And these will all have a time limit to when they drop off. But you would pay your $5,000 tax, and then you might pay another $250, $300 on top of that. And this is broken down over the 12-month period of each of your mortgage payments, but it's baked in. And while no one wants to pay more tax, the Mello-Roos taxes can help increase your home's value based on the improvements that the money is spent on. Now, for a young family buying your first house, you might be thinking about having one or two kids. These Mello-Roos taxes often are for playgrounds, for school updates, for new schools, things that you can use being part of the community. They're not just taxes, they are specific taxes designed to pay for things in bulk. And while you're the owner of that house, you're paying into those because you're potentially going to benefit from them. Mello-Roos taxes do drop off, so paying them as the owner is kind of like you're holding the baton during the time of your ownership. If you're there long enough, you might see some drop off. You also might see new ones added on. These are things that are voted on. So the community is agreeing that they want to do this. So PMI, HOAs, Mello-Roos tax are three things that bother buyers, especially when they're first thinking about it, because they initially think of the cost and they don't want extra cost. But when you start to look at what these things are and how they potentially benefit your long-term ownership, there are pros to equal the cons of these things. Ultimately, we would love to have all these benefits and pay nothing for them, but generally that doesn't happen. If you have more questions about purchasing a house, getting your first mortgage, doing a refi on your current property, please reach out to me. I'd love to talk to you and see if I can help you.